What's going on, traders? Sandro O'Connell with Pristine Capital coming at you with yet another market recap video. This is take two of our video for tonight. My apologies. My sound settings, every once in a while, they'll kind of reset and I have to redo my microphone, but my apologies. There was no sound on the first video, so we are doing take two. Thanks everyone for tuning in. Today we are going to talk about the price action in the indices. We are going to go through some of my trades for today. We'll go through options order flow as well. Before we jump into all that, quick risk disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. All right, let's jump into it. Let's take a look here. So today, I'm going to jump onto the ES daily chart. Let's go through our box scores first, and because I'm recording this a little bit later, we can already see the futures that are trading for tonight's session. Okay, box scores. We had the S&P 500 as measured by the SPY down 0.81%. We had the Nasdaq QQQ down 0.6%. We had the IWM small caps down 0.92%, and we had the Dow Jones down 0.73%. So for today's price action, we got this big extended range red candle to the downside. And this was definitely something where, at times it feels like, oh my gosh, this is a huge red candle. It can feel kind of disorienting. Existing positions that you have on, it might be like, oh my gosh, this one's down 5%, this one's down 4%. It's definitely something that's a little bit different to experience and to see. But these price movements are very, very normal. They happen all the time. And what I try to do is when the market gets very extended, I just try to mentally prepare myself for the inevitable little drop that's going to occur. In yesterday's video, we were talking about, hey, there's this natural price cycle. And the price cycle revolves around these key moving averages. And in any healthy market, you're going to have periods where you're below the key moving averages. And you might be extended away from those key moving averages to the downside. When you're below them, you might be trending down. Eventually you get extended. Eventually, at some point, you retest those key moving averages from the downside. Sometimes you retest them and you fail and you keep moving lower. Other times you test them and you end up breaking through them like we had here. At that point, you're trending above the key moving averages, and at a certain point you may get extended from those key moving averages. The next step when you're extended from the key moving averages is you pull back to the key moving averages. So that's why I was talking about yesterday, hey, we're very, very extended. And I've been mentioning this for a couple days here where, it's not like a prediction, we're going down, anything like that. But it's really just saying, hey, if you're, a rational investor or a trader and you have reasonable expectations for the market, when you get very extended, you should have in your realm of possibilities within your mind, hey, we could get a nice pullback to those key moving averages. And what you'll see here is, even though today was, I guess you could call it like a violent day of downward price action, we did not even pull back to the 20-day. So that is super important to realize, hey, this pullback in the grand scheme is really still nothing. Another thing to consider here is sometimes when we get these pullbacks, sometimes they're like a one-day thing. Sometimes it's no big deal. Other times, though, when you get very extended like this, you can have, periods in the market where you have a multi-week little mini correction. So what I mean by that is what happened in March. So let's take a look back in March. This was, 4 months ago at this point. But you can see we had the pullback started February 16th and we bottomed out on March 4th. So that was 2 weeks. So anybody that was say on this candle right here, you were buying the dip. All my stocks that I really like are down 5%. I'm buying in. There was a lot more pain in store. So a lot of times what traders will do is they buy the dip right here, then they buy the dip right here, then they buy the dip right here, then they buy the dip right here, and then they sell the low down here. So that can really happen. So like just in terms of expectations, every time this chart gets extended from the 20-day, at some point it pulls back. But there's always those traders that every time we get extended, they just continue to add positions and they get really excited. And then when we pull back, they blow themselves out and they're done trading forever. So that's why, like, as a trader, you want to approach the market as a professional and just be like, yeah, this is just something that happens, all the time. It's not something where like, oh my gosh, I was really happy about my investments yesterday and now I'm really sad and emotional over here. It should just be like, this is part of the game, part of how it all works. And even too, like, once the market gets to these lofty levels, it actually gets kind of like boring as a trader, because if you're a pro trader, you're approaching the market with the mindset of like, okay, I don't like to buy stocks when they're extended. Most of the good stocks are really extended here, so I'm not really buying anymore. And if you're a trend trader like I am, you're not like trying to like get out in front of this thing and short it either. So you kind of get to this point where like maybe you're trimming some stuff, maybe you're making little tweaks here, but you'll notice over the past 2 weeks, like I haven't really been like super active in the market or anything like that. Just because when you're extended, it's like, okay, the risk reward isn't really here. At some point you end up getting these pullbacks and then the risk reward improves. And I think institutions, they're of that same exact mindset. Like most institutions, who really wants to be buying the S&P 500 when it's, this far extended? Usually it's people FOMOing in, forced buyers, momentum buyers, people that need to put their cash to work. But institutions as well, like they would rather get a nice like juicy pullback to really start unloading and really buying into the market. So yeah, it's just important to have context. Like, if you're a big like financial news junkie, that sort of thing, they'll literally make you think that like because the market was down today, something is wrong. Like, oh my gosh, why was the market down today? I want to know. Somebody give me the reason. Like there has to be like what went wrong today. And nothing really went wrong today. It's how the price cycle works. So that's kind of my take on it. I want to be open to, further downside. And then the other point I want to make here is, as a trader, we all make mistakes, myself included. And the interesting thing is like, so I used to play tennis competitively, and when you make a mistake playing tennis, you hit the ball out of bounds, boom, you lose the point. You serve the ball into the net, you double fault, you lose the point. Opponent hits a winner on you, you lose the point. Whereas with investing and trading, you make mistakes and you don't feel the impact of your mistakes until, the future. So a lot of people, you can make a series of mistakes consecutively and then all of your mistakes hit you at once. And that's typically what happens on these red days. And that's why they can be so painful and why people, they'll get this emotional feeling of like, oh my gosh, I hate this. Like I'm done trading forever. Or like, whatever. They'll just get bent out of shape. We all make mistakes during the run up. And especially if you're like a new trader or inexperienced investor or trader, people will make a ton of mistakes here. And then here's where you either have to correct your mistake, acknowledge your mistake, whatever it might be, or just be like, hey, here's how I would play this setup the next time it comes around. Because, the way you want to think about this is literally an infinite game. Like for me, I want to be trading for the next 40, 30, 40, 50 years of my life. So to me, this is like no one single day of price action is really all that meaningful in that grand scheme. When you're thinking about 30 years down the road, 40 years down the road, 20 years down the road, 5 years, 10 years, it really doesn't matter. Say if you were like, I added too many positions up here, et cetera, et cetera. Trust me, you are going to get another bite at this apple. The market right now is starting to come in from being overextended. At some point, it might take a couple months, but look at what happened in April. We had almost the same exact setup where market, look at this, got very extended. And of course, up here, it felt like it was never going to end and, all that. We got our pullback to the 20-day, and we also got our pullback to the 50-day. So I'm sure there's a lot of people, like myself included, where you go, man, I wish I could have done this differently. Don't worry. You're going to get another bite at the apple. You're going to experience, like for some people as well, they go, man, I just wish I could get a pullback. I really missed like that stock and I want to buy it and, I totally missed it. You're going to get another shot at this scenario as well, where you're plunging below the 50-day. So it's important, like these scenarios are going to just continue and continue to repeat as you continue along like your trading and investing journey. So it's important to make sure you take them seriously, make sure you give them your best, but you're going to get plenty more shots on goal of this same exact configuration. So I think that's very important. But yeah, S&P 500 will really quickly go to this level here. Here's what I'm watching. So we pulled back into this weekly value area, and we found support at this weekly point of control here. And you can see buyers came in, supported the market. One thing that I am thinking about is, hey, let's say under this scenario, let's say this is the beginning of, let's say it's like a 2-week chop fest / like downward trend. I notice, hey, we found resistance at this 20-day simple moving average. Around lunchtime, you can see this was around noon. We also hit that same level of resistance again towards the close. So if this is going to be a new, let's say like down leg or whatever you want to call it, it would make sense where we continue to find resistance at this level. And we'll have to see tomorrow. I'm going to be watching, hey, does this weekly point of control hold again? So that's going to be a very important level that I'm watching. Let's take a look at the NASDAQ here. And you're going to see with the NASDAQ, yeah, again, like this was a very, very small pullback in the grand scheme. NASDAQ, you can see is measured by the Qs, only closed down 0.6%. We did have a flush below this 5-day EMA. But just consider, if this does end up being like a legitimate pullback, the 20-day simple moving average is all the way down here. But again, as of right now, very standard pullback to the 5-day EMA. Russell, this thing definitely got a bit oversold in my opinion. We had a push down to the 3 standard deviation down level. And I actually, when you look at my trades, you'll see that I day traded this one and I actually purchased it, pretty close to the lows today, which is pretty cool. So yeah, Russell definitely not looking good technically, but as of earlier today, it was for sure pretty oversold. The Dow Jones, you'll see we closed below this point of control, but we held the key moving averages here. So yeah, not really all that much to go off of with all these headline indices. And it just looks like we're going to need more time, more information to just see how this price action plays out. Yeah, now we've officially cleared out of those like incredibly overbought levels. Let's jump over to our market breadth. You'll see market breadth. This was a huge washout, and I actually like to see these washouts. This is just another natural part of the way sell-offs occur, where a lot of times you'll start to get that breadth divergence where you'll notice over the past 2 weeks, the breadth really hasn't been that strong or that good. And what that tells you is there's been large parts of the market that have already been in corrections. So like the mainstream financial media, they'll basically say, we just had a sell-off, it started today, and here's what happened. But if you're really like a price action junkie, you monitor breadth, you monitor different sectors and style factors like we do, like this correction has been ongoing for about a week or so. This is more like the crescendo where it all comes together. And today was the first day that the growth stocks really sold off as well. But yeah, very poor breadth today. Looking at our heat map, you'll see there was some nice relative strength in Amazon and some nice relative strength in Tesla as well. Although Tesla, has really been weak over the last 2 weeks. So this is really just like an oversold bounce. But Amazon really standing out. And I currently have a position on Amazon in my trading account and in the trend portfolio. But you'll see that, large swaths of the market really washed out today. And even the FANG stocks, which have been very strong, also had a bit of a washout. NVIDIA, which has been our key market leader here. Let's pull up NVIDIA. And if we check this stock out, this has been riding this 5-day EMA for quite some time here, for the better part of a month. And you'll see first close below the 5-day EMA, but this thing is not even tagged the monthly value area high or this 20-day simple moving average. So in terms of the technology sell-off, I don't really have much confidence in being like, oh yeah, this sell-off is so overdone, it's over, because we still have a lot of these technology companies that are still very overextended. In terms like the Dow Jones and the Russell, those have been selling off for about a week now. I feel more comfortable with those saying like, hey, this is pretty oversold here, but certainly not a lot of these technology companies. Go into our sectors. We'll run through this very quick. All the sectors were red today except biotech, which was up 0.48%, and the real estate sector, which was up 0.02%, but pretty much a bloodbath everywhere else. And then style factors, very similar, red across the board. We had growth stocks, which are our best performers. Actually, the Minvol was the best performer, down only 0.65%, and growth down only 0.68%. And you can see biggest losers for the day. We had international momentum and we had international value. There's been this big exodus from Chinese stocks. I think there's been some gamesmanship between the CCP and the United States, where the CCP essentially let this company DD go public. And I think they're like the Uber of China or something like that. They went public, and then immediately after, the CCP hit this company super hard. And so everyone that invested in the IPO essentially is majorly underwater. So that definitely leaves a bad taste in everyone's mouth. And you can see, investors are pulling away from these Chinese companies. Let's take a look. We'll pull up some of my trades for today. And really my strategy for today was, hey, we got this pullback. It's, I don't want to disrespect it and just be like, all right, today I'm buying the dip and everything, it's overdone, I'm just going all in. So I tried to stick to day trading today. So I put on a couple of trades. I put on some Q's puts yesterday, and those worked pretty nicely today, but I got long some SPY August 20th 430 strike puts for $8.91. That was at 9:36 a.m., pretty much right off the open. I closed those out for a small winner later in the day. So I closed those out for 907, basically just a little scalp winner. I attempted some other trades as well. So I wanted to just take shots at things for day trades. But my strategy for today was, hey, I don't know how deep this sell-off is going to go. If I try something and it doesn't work immediately, I am not going to hold on to it. Because that's how a lot of retail traders get destroyed. They will buy stocks on the dip. It dips even further. Then you get paralyzed because you're like, geez, it dipped even more. And then you go, okay, let me buy some more on the dip and some more on the dip. And that's where you can really get, you can get hurt and you can lose a lot of progress you've been making in your account. So I took a shot at some good RX. August 20th calls. They had a catalyst. It was a headline with DoorDash. They were pretty oversold. I took a shot at these for 208. I saw that this price action, there was a resistance level that GoodRx just could not clear. So I stopped out of these very quickly. So you'll see, nice little bounce today, which is good. But you can see it never made it back into this weekly value area. And it certainly could, and maybe it does, and maybe this just turns out to be like an awesome setup or whatever. But I didn't get that immediate response I was looking for, so I cut this one out. So I closed it for 190. I paid 208, and I just put news was sold, couldn't break into the weekly value area. I also took a shot at IBM here. I put on some 140 strike calls for 518, and I just put short leash on this one. This one also had a catalyst where they were doing an acquisition of a cloud company, and this one as well. I took this one off for a small loss, closed out for 462. I had paid 518, and this is another one. It might work out, but if I take my shot and it doesn't immediately work, I don't want to be in it, especially when we're in this little like what could be a down sequence here. The one trade that really worked well for me, so at 9:49, I noticed IWM was very oversold, and it was the 3 standard deviation down sell-off. And that's one of my favorite setups where you can get a really nice risk reward there. So I got long some July 16th calls for 368. I just put here oversold bounce day trade. Took this one at 9:49. So IWM, and this one was very cool. So I actually caught this one like literally like I almost bottom ticked this one, and that's definitely like a large part of that is just getting some good luck going your way. But yeah, so I entered this one at about 9:49, and you can see this was at 9:40. This is the 5-minute chart, 9:45, and then this 9:50 candle is where we had a bottom. So I literally like almost bottom ticked this thing. And I went with some calls that were pretty short term for what I usually trade. These were, literally only have a week until expiry. We got a really nice oversold bounce here, and it sort of faded out a little bit into the close. I could certainly have held on to these into, tomorrow, but I want to just stay disciplined and be like, this is a day trade. I don't want to be adding incremental risk here. This is just, hey, I made a couple bucks here. It's all good. So I took this one off. I put this one on for $3.68, and I took this one off for $5.14. So that was a nice winner. And what's cool is like when you start looking at the math, I've been reading some really good trading books. I started reading them over vacation, and it really got me in this mindset of like keep your losers like as small as possible. Really shoot for those small losers. And that's what I tried to do with like my day trading today, and it worked out. Where like I took like 4 shots on gold today. I had one was a very small winner. I had my SPY trade that I just scalped for like the tiniest winner. I had one small loser, good RX. I had another small loser, which was the IBM. But then I just had one big winner, which was the IWM calls. And I think this was like, this was like a 50% winner that financed the other shots on gold that I took and then some. So it worked out very well. Today I made a couple bucks just doing some day trading while the market was essentially like, in its little down sequence. And then I also closed out my QQQ August 20th 361 strike puts that I had added yesterday. Closes out for 1042, and I had paid 879 for those. And I just saw like, okay, dip buyers are coming in, so I'll just take a little win here, and that's about it. So yeah, for my trading, I didn't add any incremental risk. I was like, you know what? I'm just going to let this play out. I did some day trading. I think that's also my plan for tomorrow. I did notice some really nice relative strength stocks. I am watching them very closely, very intently. But I'm going to go into tomorrow's session with that same mindset of, let me see if I can day trade some of this volatility. And I'm not going to try to like do too much or be like, oh, okay, this is where the bottom is or this is where the top is or whatever. Just while we're in this little sequence, see if I can do some scalping, see if I can make a couple things work, stay active, and just look for the relative strength. Another thing I was doing today is I typically keep a nice little focus list, and I was just kind of updating my focus list throughout the day. Some things that were acting like horrible, I was taking them off my focus list. Other things that were showing strength, I was adding them onto the focus list. So that's another thing. When the market's really just like not behaving the right way, it helps to be active in some way. Like, okay, I'm either scalping or working on my relative strength lists. But yeah, I want to make sure I'm not just like, okay, today I bought the dip, and now tomorrow I bought the dip again, and then the next day I bought the dip again. Like, I don't want to do that. And then real quick, let's just take a look here at our options flow. This video is already very long, so I'm just going to pull up our Tradescape. And where is this here? And we'll just take a look at the flow leaders. And you can see here our flow leaders. We had Amazon, which took in a bunch of call premium. And we had Tesla as well, which took in a ton of call premium. That being said, that about does it for this market recap video. Thank you so much for your patience with the second recording of this. My apologies for that. Hope you all had a good trading day, and I will see you all tomorrow.